If you ask mainstream finance pundits as well as YouTube, internet celebrity financial analysts such as Patrick Ball and whoever runs the How Money Works YouTube channel what the current state of the crypto industry is, they'll unequivocally tell you that it is on the brink of a generational collapse and, more importantly, has lost its mojo to prediction markets. Now, if you don't know what prediction markets are, they are platforms such as Polymarket and Kalshi, where people go to gamble on everything from who's going to win the FIFA World Cup final to how many times President Donald Trump is going to say the words, quite frankly, in a press briefing. I'll elaborate more on what they are later in this video, but for now, all you need to know is that they are platforms that allow literal gambling to occur while hiding under the CFTC recognized label of commodities trading. The reasoning behind why these have completely taken over crypto trading predicates on the idea that after finally getting recognized by governments around the world and getting assimilated into the very financial system it was designed to fight against, crypto has essentially lost its spark, its purpose, its excitement, and its promises. And with basically no new frontiers to conquer and no new milestone to look forward to, its traditional speculation base have simply moved forward to a new, flashier form of, well, speculation in prediction markets, whilst the much wealthier ones amongst them have simply moved on to AI. Whilst this idea and concept might sound completely reasonable and logically follows, I like to say it's complete and utter bollocks. And in today's video, I'm going to be dissecting the very fundamental basis of this argument and giving reasons why I believe it might just be one of the most misguided crypto takes ever. Now let's look at the central claim. Over the past 8 months, Bitcoin has collapsed from an all-time high of about $126,000 in October of 2025 to a little less than $64,000 as of the time of recording this video in July of 2026. Other flagship cryptocurrencies such as Ethereum, Litecoin, and Solana are down 61%, 66%, and 71% respectively in the same time period. However, prediction markets such as Polymarket and Kalshi have seen their all-time volume exceed $200 billion in the same time period, with a little over 2 years of operation under their belt, taking center stage during the FIFA World Cup, as well as, of course, during the 2024 US presidential election. Now, quite frankly, there is a clear correlation that can be plotted between these two opposing outcomes. And strengthening this case further is the fact that literally every major stock market index, such as S&P 500, the Dow, the Nikkei, have all experienced multiple all-time high breaks back to back in the same time period, basically erasing any possible counter-argument that Bitcoin's struggle might have been a result of a broader market struggle. However, while correlation does in fact make for a tempting case for conclusion, it doesn't always equal causation. A very good argument for this can be seen in the fact that the success of prediction market is not directly dependent on fallen crypto prices. During the recent crypto bull market that lasted roughly between the years 2024 and 2025, prediction markets were exploding to record highs in users and volumes, whilst crypto prices continue to hit new highs in the same time period. In fact, the adoption of these prediction markets platforms were largely driven by crypto enthusiasts themselves, who literally saw no problem in participating in crypto speculation whilst exploring these new gambling casino platforms as well. Now, there was no cannibalization of one by the other in that time, and finance YouTubers as well as mainstream finance pundits weren't making such claims at the time. It just so happens to be that the moment the crypto bull market ended and crypto started experiencing falling prices, well, prediction market platforms didn't experience any drop in their users and adoption at all, and just continued on their adoption curve. This correlation at best points to the fact that Prediction markets have continued to see their users and adoption soar regardless of falling crypto prices and even have a growth path that is completely detached from that of the crypto market itself. To make a claim that it has been cannibalizing off of the capital that would normally speculate in the crypto market is a bit of a step too far that would require more than just correlation to substantiate. Now, let's look at what each distinct speculative asset/product offers against the other. Cryptocurrencies offer buyers the ability to speculate on assets from a thesis-led perspective through time and reap an uncapped reward at an unspecified period in time. Prediction markets, on the other hand, offer gamblers the ability to be able to speculate on a fixed outcome and reap a fixed reward at a fixed period in time. To break it down to layman terms, when you're purchasing crypto, you probably have a thesis-led idea. Maybe you're buying Ethereum because you think it's the future of finance, the whole DeFi thing, or you're buying Solana because you think meme coins are the future of finance, or you're buying Litecoin because you think, well, sound money and decentralized permissionless money is the way the future is gonna head towards. That thesis-led perspective is the reason why you are buying that asset. And there is no fixed time you're looking forward to selling it and no fixed amount of guaranteed reward that you're actually determined to get. Now that feels more like traditional stock investing. Now, when it comes to prediction markets, when you're actually gambling, you're gambling with a very fixed set of odds at the moment when you actually make that gamble to reap a very specific percentage of reward at a very specific point in time whenever that outcome resolves. Two different reward structures that drive two very distinct behavioral patterns and categories of people. For most people, the idea of pure gambling still feels a little bit morally decrepit, as well as highly irresponsible, and thus generally just refuse to participate in prediction markets altogether, the same way they would never associate themselves with a sports betting app. And a lot of the people who actually go into these prediction market apps to speculate will not do so with any significant amount of capital because there is just no thesis behind why they should actually make such heavy capital commitments to an outcome that almost entirely depends on luck. On the other hand, crypto offers speculators a form of justification which comes in form of a thesis. For example, those who were speculating on Solana during the 2024/2025 bull market were doing so with the hope that, well, meme coin speculation will just be the order of the day, and that will in fact become the future of the financial market, and thus made them feel like they were making genuine intelligent financial decisions that are similar to that of investing in the traditional stock market. To this day, majority of crypto speculators haven't interacted with any form of prediction market platform, despite the fact that the crypto industry was literally the primary driver of Polymarket's earliest adoption. And they cite a disinterest in it largely due to, wait for it, a general disinterest in gambling. Now, this might sound a little ironic, but considering the difference in incentive structures between the both speculative asset classes that I explained earlier in the video, it really does make a lot of sense. So, why are these mainstream financial pundits, as well as these YouTube financial celebrities such as Patrick Boyle and the guy that runs the How Money Works YouTube channel, parroting the idea that crypto has lost so much of its speculative capital to prediction markets? For one, these are individuals that have a long-held negative sentiment about the crypto markets, might not understand or completely disagree with the thesis behind most crypto tokens, or even every single crypto token that has ever existed. They have expressed this sentiment multiple times through time on their various platforms. There's also the aspect of a recency bias due to the current fallen prices in crypto assets that makes it easier for pundits to justify their current sentiments while justifying it with any correlated event or incident that they can capitalize on. And it's not a new phenomenon. Every single significant market drawdown slash bear market Bitcoin has experienced in its barely 2 decades of existence so far has been met with a chorus of a death declaration by mainstream financial media outlets. In fact, Bitcoin has been declared dead a whopping 475 times by major mainstream financial outlets since its inception in 2009. However, there's a bit more credence to the argument that the crypto industry might in fact be losing a significant mindshare and probably even capital to the AI bubble. In February of 2026, one of the largest Bitcoin mining pools in history, Mara Holdings, struck a deal to shift a significant portion of its Bitcoin mining operation to AI data center operations. And this is not an isolated event. It is actually part of a broader trend of large-scale Bitcoin mining operators shutting down all or a part of their entire mining operations and shifting or allocating all of that resources into AI data center build-outs, which tend to be more profitable these days. This, in fact, has been a significant drain in resources that would have originally been allocated towards the network security as well as block production for the Bitcoin network. And although this hasn't led to any significant direct negative effect on the network itself, it sure represents a significant drop in mindshare. Now, as for the argument that there has been a significant drain in speculative capital that would have originally directed itself towards the crypto market, now moving towards the AI bubble, there's a lot more credence to that claim, but it's still very correlative without a lot of direct causative links that can be substantiated. Now let's really talk about it. Let's really break it down. There's a clear correlation between the acceleration of AI spending with particular respect to data center build-outs, the explosion in prices of stocks belonging to companies such as Nvidia, Palantir, as well as the rest of the AI integrated Fortune 500 companies, and the recent prolonged decline in crypto prices. However, there's not a lot of causative links that can actually be established between the two. And now we're going to actually zoom out for a bit and look at it. On the far side of the argument, you see very influential AI figures such as the founder of Palantir, Peter Thiel, literally stating on air that he doesn't see a lot of upside left for Bitcoin and he has largely exited all of his Bitcoin holdings. And we know Peter Thiel is someone who's actually very heavily invested in the AI race. So it can be argued that capital of people like him have in fact found crypto now to be boring and are just pouring all their resources into the AI race, AI data center build-outs, whatnot. That's a possibility. However, a bulk of crypto speculators are actually everyday retail individuals that don't necessarily make up a significant portion of the ownership of Fortune 500 companies and whatever other companies that are actually involved in this AI race. For example, those who are still private companies and aren't publicly traded yet, such as OpenAI as the time of recording this video, and Anthropic. Now, so if you look at it, a bulk of the crypto audience simply don't have the money, because you can actually see data that's actually pointing to the average, cash that people have in their bank account for the average American family being at record lows for a while now. And I feel like that actually is also correlative with the decline in crypto prices so far. And I feel like just looking at that, it actually establishes more of a link to the reason why crypto prices might be down now than just saying those wealthy people that would have been interested in crypto are now pivoting to AI. However, I will continue to research this topic and probably drop a better video in case I find any new information that might actually counter my current perspective on this topic. And if you enjoyed this video and you actually like, fun videos like these are actually super insightful and educative, then give this video a thumbs up and subscribe to the channel and turn on the post notifications so you do not miss any future videos.